Stephanie, what's your take again on what the size of these moves? Enormous.
We just didn't need more bad news. We did not need Mnuchin and to be confused by the commentary that he was talking about. We didn't need a government shutdown. This just adds to the negativity that we already have out there and the concerns we already have out there, mainly on trade, in my opinion, mainly on the Fed and on international growth slowing. You add it all up, you have a holiday-shortened day and week, and most PMs do not want to take any kind of risk given this backdrop.
Today? You said it was trade.
I think it's everything. I think where we already came into today being very concerned about trade and also about the Fed. And then you add this to the mix, and it's just an excuse not to buy, to be quite honest with you. I do think it was interesting to see the sectors that led relatively today.
Defensive.
It really was the cyclicals that kind of led on a relative basis. Defensives got clobbered. And in a way, you kind of want to see that, right? In terms of a market bottoming, you don't want to see this market being led by defensives. You want to see the market leadership in kind of growth and in cyclicals. That's a sign that people think that there are better things to come, but we're nowhere near there yet. I just thought today's action was sort of interesting.
I mean, to me, the tell was P&G. P&G has been such a relative outperformer, and it's considered defensive. People always need to brush their teeth, of course. And it's actually showing some real growth, so it's been a better performing stock. So the fact that it was one of the hardest hit Dow stocks tells you what? Well, the baby's getting thrown out with the bathwater?
Kind of, yeah, but I also think that it got overbought. I really do. I mean, you're talking about 24 times forward estimates for 1%, 2%, maybe 3% organic growth. I mean, you could get a better growth at McDonald's for that matter in terms of organic growth, but they're basically selling the winners today. And I think what's happening and is going to happen for the rest of this week is I think you're just going to have PMs like myself positioning for 2019. 18 was very hard, but let's see if we can actually get a couple of these high quality companies that have been down so dramatically. And I'm not talking about the P&Gs. I'm actually talking about quite a different set of stocks. But if you can find quality in this environment, that's where I've been slowly picking.
David, what's your take? Defensives led the way lower, but still big moves lower across the board.
Well, I think part of the problem is Twitter. I mean, that's creating a lot of problems with all these guys talking, and that's part of the problem. But I think the issue with the market, I mean, to me, you guys have covered a lot of the topics that are important. I don't want to repeat all that, but my observation is that the market is falling and nothing's gone wrong. The economy's good, companies are fine, the banks are obviously. Well, that's my point. The question is, I've never seen that, and I've been doing this for 30 plus years, where the market's falling into no bad news, or at least, and so you're sitting here sort of saying, okay, so what to do? No, I'm waiting for the bad news. I'm waiting for something to go wrong. 08 was a great buying opportunity because things went wrong, so we could get better. And I think I view investing as you make money when things go from ugly to okay to good to great. And things are somewhere between good to great right now in terms of the economy. And we see that on all the numbers that the Fed is talking about, which is why they're raising rates and cutting.
Only here, really, in the US, David. I mean, do you think the market's looking at the international outlook or more to the point, even looking at the US outlook, but 12 months ahead?
Well, I think most of the investors in the U.S. market are U.S. people that care about the U.S. I think international is important, but it's on the margin. And that's why that market over there those markets over there could be so difficult, and we would be okay. I mean, Japan did nothing for almost 20 years, and our economy did fine. So I don't think that's the issue. I think there are two things. One, nothing's has gone wrong yet. And two, the index funds, we're seeing the other side of the index funds, meaning when all the money was pouring in the last 4 or 5 years, they were value indifferent on the way up. And they were buying all the stocks.
Yeah.
And now the reverse is happening. And that's why you see something like the S&P and the Dow basically both down 11% for the year. There's no differentiation because they're selling everything. And that's got to get washed out as well. So the market has changed a lot since 2008. The structure, who buys it, how it's bought, how it's sold. So we've seen false liquidity the last 4 or 5 years as all the money comes pouring in. So everything looks liquid, everything looks fine, and now we're seeing the other side. So this is the test that we have to go through, and this is the opportunity. I mean, I think it's going to be the better times are ahead. We're getting back to capitalism and not Fed-supported stock prices or bond prices.
One thing that if we're looking for reasons why, one thing I keep hearing from big investors, Stephanie, is why Why the relentless selling? The market's fighting the Fed, and the Fed is not being very reactive, not factoring in the fact that inflation expectations have been falling, making a mistake trying to get ahead of overheating when the economy and the markets are telling you that we're not overheating, we're slowing, and that's going to be a mistake.
Yeah, and we talked about this last week, that actually the Fed, the committee, lowered their PCE targets for this year and next year because we aren't seeing inflation. And PCE, that the core PCE number is what they look at to identify if there is inflation. So for them to lower that expectation and to raise rates is a contradiction. And so it is part of the problem. I think that trade is a part of the problem, and I think that the Fed is part of the problem. And the rest of this stuff, we didn't need to get.
I guess what I'm wondering is, are you waiting to buy, for instance, as someone who is long, and I know you look at the fundamentals of the companies, which are looking, pretty good, but do you have to wait till the market stops challenging the Fed here?
Well, yeah, I mean, you're right. We don't want to fight the Fed on the way up and on the way down, but I actually think that we've seen an overkill on some of these companies. I mean, when you can get American Express at 11 times forward estimates, or you can get Union Pacific at 12 times forward estimates, where I actually feel pretty good about the earnings estimates because they're doing special things, restructurings and those kinds of things, when I can find companies that are blue chip in nature and down 20 to 30, 40% even in some cases, I find that that's attractive. Now, it's been wrong to be buying the dip this year. It really has been. It's been right to sell into the strength. But that's not my style for a long-term investor. I'm looking for blue chip quality companies that are on sale, that have catalysts, where I feel confident in the longer-term picture.
So despite today's sell-off, stocks did get a slight boost earlier after billionaire investor David Tepper told our Scott Wapner he's using the market downturn to, quote, nibble at some stocks today. And Steph, the idea, I was with Scott when he was reporting this, was that he just saw, an opportunity within this sharp slide that we got early morning, that things were just a little overdone or a little washed out, and just went to nibble.
And particularly in certain sectors like tech, like FANG. I mean, I've been nibbling at Facebook myself. I think you can pick your way around. I've added a little bit to Salesforce.com as well. If you listen to the company and what they have to say, even last week when they were in town, they're talking about margin expansion. They're not seeing any slowdown whatsoever in IT spending intentions for next year, and that's what's key. And the stock is down substantially since then. And again, what I mentioned before is a lot of companies that are down a lot, specifically in the cyclical sectors, in technology, in financials, in industrials, materials. That's where your value is if you have any confidence whatsoever in earnings. And it's not across the board where I have earnings confidence. It's special situation companies, and you have to do the homework, and it is a stock picker's environment at this point.
David, you were saying that you want to wait for more bad news before you do buy, despite being quite constructive on the US market. But are there any stocks in particular that you've been buying in the last week or so?
Well, I think everything I've bought in the last 3 months has been wrong because they've all gone down. So, but I do think that, there are, the big banks look attractive, but they looked attractive 2 months ago, and now they're down 10%. So I think you just have to, again, I own them, I run the funds, we do the best we can. And the idea is not to panic, and obviously, fundamentals are fine, but we have to watch them. And my issue is that we have to work through a cycle. Meaning, you said, I don't think anything's gone wrong yet. And so that's the issue. And once that starts to happen, that's going to be the time that I think the average person can buy with a little more conviction and a little more surety that they know what they've got. Again, I'd rather buy Bank America up 10% and know what I have than buy a lot here and just assume everything's going to be fine, that the Fed's going to back off, or non-performers aren't going to go up, or we're not going to have a recession or something. So I think it's an interesting time, but again, the stock prices are prices. They're not reality, in the sense that the companies are doing fine, but the stocks could go up, they could go down. So you have to be careful not to say, well, the company's doing fine, therefore the stock should always go up. Remember in 2008, it was basically, don't worry, home prices never go down. And now here we are in 2018 saying it's okay, the economy's strong. So we have to be careful to make these broad generalizations that everything's going to be fine. Again, wait till something goes wrong, and then we can be much more constructive about what we do.